Okay, so we're just going to take a look at the dollar quickly, okay? So it looks like the dollar, okay, based on what we were saying last week, if you guys remember, we were waiting for it to come into this demand zone, which it did violate a bit. However, last week was news week. So there was a lot of news and a lot of pushing the market around. So if we look at the daily, however, you can see that it wicked and closed above the zone. Now, when it did open the next day, it was lower, but then it pushed above. The next day would have been key in seeing which way this market is going. Had it pushed lower down or consolidated or maybe produced a very small candle, such as something like this, then it can be an indication that price wants to keep moving down. However, seeing as it closed bullish for the day and then the next day closed bullish, you can see here just in this daily candle, what this tells me is that price pushed up first, then came back down. So without going to the lower time frames, I know that that was probably a break of structure or change of character. So now if I drop to the lower time frame, so let's say we drop to the 4-hour, you can see that there was a candle that pushed up and then came back in. So this is probably news-based for sure. So that wouldn't really count as a change of character, although it has taken some liquidity. Let's drop down to a lower time frame and see what we're looking at. So 15-minute. So this is more clear of, change of character. To be fair, the change of character happened down here. Okay. So based on this area here is where price started to reverse. So if we just highlight this, you can see that price changed character right here. So price change character right there. This. And after that, you could say Asian session. However, we don't really take that serious. So you could say it kind of changed character from here. To be fair, actually, we can say it changed from there because that move was outside the Asian zone. So that was the change of character. And then you had the higher time frame change of character up here. Okay, but you can also count that as a break on structure on lower time frame as well. So let's draw that in as well. So from here, because this is the last high, right? The last lower high. So from there until this point is a break of structure. And of course, you have the break of structure after the chop as well, which confirms the move. So from that day on, we were basically bullish. And now we're in this area here. Now, as we always say, the reason why we don't trade Asian zone is because look what happened here. Anybody that was trading the Asian zone was in profit until London came and took them out. And then you can see a accumulation change of character on the lower time frame here. If we go down to the 3-minute, you can see that here, which is happening below the Asian low, and then it takes off. Okay. So right now, what we'd be waiting for is dollar looks bullish. Okay. It looks like it wants to take this high, although there is a supply here. Okay. So what we'll do is we'll draw that in. Okay. So we'll draw that in like this. And now I can, kind of put this back because that's been respected. That high time frame is no longer valid. And we look for an area over here, okay, where we're looking for price, where a change of character happened or there was a massive imbalance. See? So now, guys, you can see that I've chosen the order block that had a massive imbalance before it, right? So what we're doing is we're waiting for price to come back into this zone right here.
And then we're going to put 100 lots, guys. We're waiting for price to come back in. Then you're going to put 100 lots with no stop loss. I'm joking.
We're not doing that.
I'm joking. Guys. How you guys doing, man? How's everyone doing?
Let's see. Hold on 1 second. I need to stop sharing.
How's everyone out, man?
Yeah, here they are.
Yes, my people. What's going on, man? How you guys doing? Is everyone all right? Lovely. Cool, man. I just came here quickly. I've got some stuff to do, but I came here quickly. See, this week we're getting active. We're going to have Zoom calls almost every day this week, yeah? Almost every day we're going to have Zoom calls, mentorship, all that stuff. And yeah, this week we're back. I'm back. Sonny's been, I'm back.
Active. Welcome back, bro.
Good, man.
So back to the chart. So this is what we're expecting to happen. Okay, do that a bit wonky. Sorry, guys. So we come here. So we're expecting price to come into this demand zone and then break out. Okay, so that's what we're looking for right now. When that's going to happen, not sure. And I reckon it's going to be a long move taking out all of this downtrend liquidity right here. Okay. Now here we can remove this because that was not the change of character right there. Let me get some analysis in here. And so this is the area. You can see there's a massive impulse here. And we're looking for price to come into this area and then push out. Now, if we now look at the correlating pairs, so Euro USD, look. So I left the analysis on there from last week. And we was expecting price to do something like this. Now, what it ended up doing was it sort of tapped the area, but it took the liquidity, and we were wary of this area here. It took some of it and then decided it wanted to keep going up. Okay, so we can remove all of this now. This is all irrelevant. This liquidity got taken out. This equal high here got taken out, and the supply zone got taken out. So what have we tapped into above here? An imbalance. An imbalance that was right here. That's why when you guys are drawing your imbalances, especially on high time frames, it's best to just leave them in. Don't try to refine the imbalance down to a lower time frame, because on a high time frame, it needs to be filled as well. You have to understand these big moves that are happening, they're coming to fill in the bigger imbalances. Okay. The smaller ones, they usually get filled on an intraday basis, but the big imbalances that happen on like 4 hour or 6 hour, or basically any of the timeframes that are above higher timeframes in terms of like daily, etc., those are the ones that end up getting filled in by the big moves. And you can see that right here. So here we have a distribution in which price has now taken all the liquidity from this side. Okay. So anyone that was in sales from here, they're gone. And now we're seeing that price move back down to the downside right now. Now, we may see price react off of this demand zone. Okay, because practically, this is a break of structure as well. However, if we pay attention to the higher timeframes in terms of the daily, we can see we're still in a kind of downwards trend. Yeah. So we're still in a downwards trend, and on a weekly basis, we're still in a downwards trend as well. However, all of this price action looks like it's now going to get taken out, and price is going to keep moving upwards. All right, cool. So one second, guys, just need to. Okay, cool. Sorted. So in regards to Euro USD now, right? So the dollar, when we looked at that, that is bullish and we're expecting it to come back down, which it is right now. So Euro USD, we'd expect that to now make that move back up into these areas. Now, as you can see here, there's no analysis here that I've actually put on. So we're going to quickly add that in. Okay. Now, one thing, to be fair, it's already gone, but you can understand why price came here. There was a lot of liquidity from here. Okay. This is all support that retail trade. And the more a zone gets tapped into, somebody asked me, right, earlier on today, can you use a POI more than once? The idea behind that is no, because let's say I drew a POI from here, right? Even if you see it getting respected multiple times, all it's doing is building liquidity. So let's say we'd use this here, right? Look how many times support have entered these trades. And by the way, obviously people have different trading management, right? Sometimes, and I remember this as retail, I used to actually increase my position the more a zone was respected. So they may have bought here, and they're increasing their size only to get taken out there. And some people don't like to accept the reality that they're losing. And so what they do is they remove their stop loss and they keep holding basically losses until basically they wipe out their own account. But that's not the topic of right now. What we're doing right now is we're understanding that, okay, EURUSD has taken a lot of liquidity from the downside. So where's the rest of the liquidity? It's to the upside. So who's in profit right now? The sellers. So what we do is try to find out if there's any liquidity that could be in this move right here. So what I'm trying to do right now is trying to line up any trend line that I can see. So what I would do is this wick here, I would understand there's a stop loss hunt. So I might actually line it up with this trend line right here. That's fine because it touched 3 times. 1, 2, 3. People would have still managed. There's always 1 or 2 or a couple of people that somehow get in the move. So they would have came into this move and now they're in sales, they're in profit. Cool. Let's go to the back to the high time frame. I understand there's still liquidity here. This demand failed. I thought price was actually going to keep pushing down as there was the change of character and then boss break of structure on the lower time frames. However, it then reversed off of this area. Now, this area here also looks like an imbalance on higher time frame. So let's go to the higher time frames now. And we can see that, yeah, so price literally tapped into this imbalance here and then reversed off of it. And there's a lot of bullish momentum. And based on this time frame right here, 8 hour, it looks like price is actually reacting off of it. However, we're going to refine it down. So I've already refined it down to the 4 hour. I'm going to refine it down some more. So we could refine it down to the 2 hour as well. Let's see if we can refine it some more and find like a proper bullish engulfing. So now upon refining it to the 1 hour, I can see that there's an Asian low here. So what does that tell me? This low may be liquidity. So sometimes you guys are saying, oh, how do I know? You know, based on the course, these like this area is liquidity, that area is liquidity, etc. Any old high or old low is liquidity because retail end up seeing it as a place of support or resistance. So this area is liquidity. Why? Because somebody that trades retail has now done this. Okay, cool. Price stopped here. This is now, take off the magnet, resistance. And what they're going to do is they're going to try and find reasons to believe why it's resistance. Here we go. It's because this area price always rejects from. So rejected here, rejected here perfectly. Broke through, became support. Broke through again, came back, didn't get respected that time, but respect. So they know that this is an area where price actually reacts. Furthermore, they may even draw it like this. You may even see retail traders drawing stuff like this. A lot of them try to be more flexible and understand that it's an area where price reverses or reacts off of. So they draw it like this, okay? So that's how you can understand that that's a point of liquidity. The way we look at it is we target liquidity. We want to be in the trade with smart money. So I'm going to line that up and I'm looking to enter here. However, I know this is an Asian low. So furthermore, what I might do actually, and let's see if this lines up, I might actually adjust this liquidity line and see if it lines up with this line here. So this looks like a break out of the line. Probably somebody tried to buy off this trend line and then it broke through. But look right now, it's reversing underneath it. It's accumulating right underneath the trend line just to do what? Possibly something like this, which lines up with what we're thinking because we're waiting for dollar to reverse. And so correlating in that pair is the euro. So it would probably be something like this to take out more liquidity. If so be. So for the euro, I'm expecting price to obviously reverse into this area here. It may react off of this supply. This is the supply that caused a change of character. I mean, a break of structure to the downside. Let me mark that in for you guys as well. So from this point here, you could say this was a change of character. However, it was a wick, so I wouldn't have taken it as that. That would have been a stop loss hunt. But here is the change of character. And furthermore, you could probably find it even deeper inside the lower time frames. If I go down to the 15-minute, furthermore, you could probably call this the change of character. Okay, I'm focusing on the high time frame at the moment, so I'm going to keep it at that area right there. But based off of that, if we're correct and price follows a structure, it should do something like this. However, it's in the middle. So we have two scenarios. We have price coming into the supply zone and then possibly reacting and going down like this, or we have price going down into this demand zone and then reacting and going up like this. And then probably, continue upwards like this. The idea is if A scenario happens, then I expect B, as in like to sell back down. If B scenario happens, then I expect C, and then I can buy it back up. If C scenario happens, right? And what would C scenario be? You just get consolidation in the range. You just be patient and wait. Or you try to trade the intraday movements with the Asian high and the Asian low, meaning you wait for price to change character above your Asian high or Asian low. That lines up. If it lines up with the high time frame analysis, that is best. But try to find an area in which on a lower time frame would make sense to you. So for example, right, with this price action right here, I would have waited for this Asian high to get taken up. And I would have waited for a supply area in this area here. So let me just draw this out like this. So something like that. Why that makes sense to me? Because there's a significant amount of liquidity getting taken out that has been built up. Okay. Think about where is liquidity when you're analyzing your charts. Where is it? This is what I would have expected to happen, but it didn't happen. Okay. It ended up just taking the first Asian high and continuing down. That's fine. The market does what it wants. We can't control the market. We just anticipate what happens and try to be on the right side of the move. So that is Euro USD. So for Euro USD, just to reiterate again, price is moving currently right now, but I'll be waiting for this area here to sell from or this area here to buy from. Now, I know there's Asian low here, so I would be aware of that as well. So let me draw that in. Furthermore, I would wait for price to accumulate under the Asian low, then buy up. GBP USD, we're expecting the same thing. Furthermore, GBP USD looks even more obvious because you can see the trend line right there. The trend line looks way too obvious. So from here to there, you guys can see it right there. Here we have the trend line. So furthermore, there's the Asian low there as well, which is correlating with what the Euro USD had as well. So there's a demand zone in this area. What we can do is wait for price to come to this area and possibly sell down and then buy back up to take out the Asian, the trend line liquidity. Aside from that, we'll be waiting for this Asian low to get taken out first, and it could take it out with a wick before entering our trade. Gold looks very, very similar in terms of how it's moving as well. As you can see, this is what we thought was going to happen. It didn't fully tap our demand zone, which is fine. This happens sometimes, but it's shooting off and it looks like it's bullish from here. Okay. It has that same trend line as well that you can see that has been lining up from here. So from right here. So we can draw that in as well. Okay. And last but not least, US 30. So what's US 30 doing? So we anticipated from last week that price would reverse from this area. However, it looks like it still wants to remain bullish. So what we can do is we can draw in this trend line here, which correlates with this move here since it's broken out. So this would be, it's not equal lows. However, it is liquidity. So actually, let me change that to liquidity. So that's liquidity right there that can possibly get taken out before price pushes back up. However, looks like we're in a consolidation phase right now. So let's go to the high time frame. See, we can see that this order block here is being mitigated quite a lot. So it's been touched once, twice, 3 times. So this is now confluence for retail traders to buy in, okay? However, we still have this imbalance below, and we have this area that hasn't been mitigated. So what we can do is we can try and find the entry. See, as soon as I drop down to the 6 hour, you can see the demand here, right? So we can highlight that. We have already highlighted another demand within that, which has been refined. I believe it should be refined down to the 15-minute or maybe the 5-minute furthermore. So, yep. So that was refined down to the 5-minute. So up until price, as price is in this area, until price literally reaches within here, right? This would be a strong area to buy from, this area right here. However, we have this liquidity line that's forming. So the best way to approach this, right, is this is where you have to use your understanding of probabilities. So the reason why we say and why we risk small amounts, all right, in terms of 1%, etc., is because in cases and scenarios where price is respecting situations like this, right, we're expecting price to break down, but maybe it's not going to do that. So what you can do is you can risk percentages on the move. So for example, what we can do from here is we have this demand zone here, which was the last demand zone before price broke structure, as you can see, which is happening right now. So when price comes back into this zone right here, we can risk 1% and buy up, because it's a chance that it's going to respect this in form with higher time frame structure and then push back up. And then it will do something similar again. So it will push back down into another demand zone and then push back up again. And you can buy in such format. Okay. On top of that, we have this liquidity here, and price has been bullish for the last couple, weeks. So it's not far-fetched to believe that price is just going to keep moving bullish. Okay. There are times when things like this happen. You can see it happening here, just for then price to come take it out. So I do expect price to eventually do this move here, where it will push down and take out the liquidity before pushing up. When that's going to happen, we don't know. Okay. In the meantime, on an intraday basis, what you can do is wait for price to take one of the Asian sides in terms of the low, because we're bullish, and then take the high. And as you can see here, in most cases, price took the low first and then took the high. This case, it didn't. It took the high first, but then it came back to the low, but then went back up. But then in this case, it took the low and then took the high. And this case, it done it again. So from market open from here, what we would have waited for, as you guys can see, price took the low. It's tapped into this demand area here. And then price has literally accumulated, changed character, and literally gone bullish now, as you can see. So it literally just tapped in and then tapped out. So that is US 30, and obviously you guys know NAS 100 for those of you that trade that as well. Similar format as well. Asian low got taken, it's tapped into this order block beautifully, and now it's reacting to come take out the Asian high. So that's pretty much the market analysis done. What I'm going to do now is just see if there's any questions. So someone said, when is the one-to-one? So as you guys heard from Yarimi himself, he's going to be active this week. So I'm sure you'll get a chance to speak to him and get the help and support that you guys need. Where they ask, what do you think about oil? Do you trade it? No, I don't trade oil. Yeah, so let me see if there's any questions now. So guys, you need to have your cameras on as well if you're going to ask a question. You guys know how we do. So Does anybody have any questions now? Interesting. Oh, just raise your hand, by the way. If you have a question, raise your hand and I'll unmute you. Some lady. Okay, yes. Yes, sister. Can't hear you, 1 second.
Assalamu alaikum, can you hear me now?
Yes.
Hi, I had a question. Whenever I mark my POIs, it feels like it takes ages, like maybe takes about a month for it to be tapped into. Am I doing something wrong?
It may be that what time frame are you actually analyzing on?
4 hours, and then yeah, I wait for I find my POI on H4,
Yeah.
and then when it taps into it, that's when I start to look on the lower time frame for confirmation. But it takes ages for it to tap into my 4 hour point of interest.
So that's normal, of course, because 4 hour time frame, it would take a while for it to tap into. However, maybe it's the 4 hour time frame that you're actually choosing. So in past group sessions, what I've said is you want to mark out obviously the one that hasn't been mitigated, but also the most recent one, because the most recent price action is going to allow you to have an intraday opportunity most of the time. So for example, if I just go back to my chart, right? So in this case here, right? If I'm on the 4 hour, so we can see here that we have an extreme 4 hour order block right here. Yeah.
Yeah.
But also, right? Obviously, this move is happening right now. However, before this move happened, there's also a recent 4 hour order block right here.
Okay.
Yeah. So price is reacting off of this now. I know in hindsight, it looks like, okay, cool. Yeah, it makes sense. But before the day started today, I would have been looking at this area. And all I would have done is just try to find the best, cleanest order block. So basically try and refine it down to an area which makes sense, in which I think price is going to tap into, as I'm doing now. So let's go down to the 45-minute as well. So that's not, you could have said this area, but you do have this whole wick. So I would have wanted to include the wick as well. So I would have kept going down 20-minute, 15-minute, 10. So what I would have done is been like, okay, cool. Let's wait for price to tap into this 10-minute order block right here, in which it actually ended up doing that, right? So that's what you want to do. So if you're finding your areas are taking a long time to get tapped into, it may be that you're marking out an area from like weeks ago or months ago. So the best thing that you guys can do is mark out the most recent area, but also the one that makes sense, in which if you see price now, for example, if I was to see price now breaking through here, I would understand, okay, the area I'm looking for is this one. Why? This is my, I wouldn't say it's extreme, but it's the one with the imbalance in it that makes sense. If price takes out all of this liquidity, it should get to here and then reverse again.
Right.
Does that make sense?
Yeah, it does.
Cool.
So even if it takes a month later for it to tap into,
yeah, that's
or maybe
fine.
2-3.
We don't want to be waiting like 2-3 months. We're not swing traders, but to avoid that is you look for the most recent one as well.
All right.
Yeah. That's what I was saying. In terms of this area here, when I was analyzing just before I opened the questions, this looks like an area I'd want to buy from. However, I have to also look at what's happening like in front of me, like recently. So I know that this area could be a demand zone as well that I would want to take a buy from, in which had I taken a buy there, I would have been in profit now.
Right. I had one more question. Sorry. So when price does tap into your POI, what it happens is like maybe few hours later, Asian range starts. So there's not really much there's not a high risk to reward. So in that instance, what would you do? Just not even take that trade?
Yeah, if your trade gets tapped into during the Asian session, then yeah, I would say wait for London session to open, wait for one of the sides to get taken. And if it lines up with your high time frame bias, this is the thing. If your analysis is right, it should line up with your high time frame bias, in which you can take a buy based off of that or sell, whichever one it is, and it would work out. Does that make sense? So for example, here with US 30, our high time frame bias would have been a buy. So I would have been looking for demand zones to buy from. So here, instead of taking, it's a bit of, okay, cool. So let's just say this Asian range is here, right? And this was also an Asian range here. Okay, I know
Yeah.
it's taken already, but I would not consider this area because it's inside the Asian range. So I'd wait for it to get taken, in which it did, the low got taken, and then I would have bought from there. You have to look at liquidity as well. And that's why you have to add in your equal lows, equal highs, if there's trend line liquidity. This will allow you to see the market much more clearer and not be a part of liquidity and get stopped out, but actually be a part of the smart money move where they're taking the retail traders out, if that makes sense.
Yeah, it makes sense. Thank you so much. Jazakallah khair.
Okay, we have another question. 1 second from Mali. Yes, bro.
Yes. Can you hear me?
Yeah,
Yeah, how are you?
good, man. Alhamdulillah, how are you?
Alhamdulillah, bro. I was gonna ask you, like, in order like to strengthen your psychology, like, what's the first step that you would take?
So the first step in strengthening psychology is understanding where you're going wrong. Further, like, you have to understand, and we all know this as well, deep down. We know if we're coming to a trade and we're being impatient, if we're not holding our trades. Those are the usual, like, the ones that affect people the most. They're either impatient or they're fearful. So it's greed or fear. They'll hold for too long, or they won't hold long enough, or they just want to get in the move, so they just enter us like straight away. So first is understanding and writing down your mistakes. So if you understand, okay, I keep entering too early. Okay, so if you find out, oh, I keep entering too early, then now when you're in the market, right, and you're about to enter your setup, remember, oh yeah, I usually enter too early, so let me wait a bit. Let me wait for my confluences and then enter based off of that. Yeah. If you find that you keep taking your trades too early as well, so you're cutting your winners, recognize that and hold on to your winners. What actually helps a lot, and this is what me and Nasser used to do, is having an accountability partner. So what I would do is I would show when I'm entering the trade, and I'll show the analysis. Now I know if I cut that trade early, Nasser is going to get onto me and be like, yo, why'd you cut the trade early? I swear this was your TP. And I would say, yeah, it was. So why'd you cut it early? Obviously, now I'm going to feel a bit embarrassed and silly. And I'm like, I don't know why, because of this. And because he's not biased to my trade, he can tell me the truth and just tell me, like, bro, you need to hold on to your trades.
Yeah.
And that's how he helped me improve my psychology. And I've done the same for him as well. And we did the same for the team. So I'd say find an accountability partner as well. It does help sometimes to write in front of you the mistakes that you're making. And if you have it in front of you before you enter trade, you'll be able to see it and you'll be like, okay, cool. It's like a reminder, don't do this.
Nah, I get you. So
Yeah.
write down your mistakes.
Yep.
Get like a partner.
Yeah. Yeah.
Also, can I ask another question? Or
Yeah, go ahead.
I was gonna ask you, so alhamdulillah, I was doing a test and I passed phase 1.
Oh,
But now I'm on to phase 2.
Yeah.
And the problem with the phase 2 is at phase 1, I was seeing trades and it was all about selection, do you get? So it was like, my problem wasn't, oh, can I find a trade? My problem was picking which trade is like better or which one has higher probability. And now I'm just seeing nothing. And it's been like weeks and I'm just not seeing anything. So what do you think that is?
It's probably, okay, so first of all, again, it comes down to psychology. One, because you're on phase 2, your mindset is like, yo, I'm so close to getting funded. I'm so close to my life changing. Your brain is now starting to understand that if I make the right moves, my life is going to change and things are going to start going well for me. So what it's also doing now is being extra critical. So now it's like looking at the charts and it's like, no, that doesn't look like a move. No, that doesn't, or that doesn't look good. And you're over analyzing trades that are possibly there, which could work. But because you want to make sure you pass, you're kind of putting a bit too much emphasis on the challenge and phase 2. So what you need to do is keep trading the same way that you're trading phase 1. Keep trading the same way you was backtesting. Keep trading the same way you was doing phase, your demo trading. Yeah, if you keep trading and doing the same things that you're doing from before, then it should help you, like in terms of starting to see opportunities again, because it just comes down to a lack of. Sometimes maybe there isn't an actual, move in the market right now. That's fine if you're genuinely not seeing one. But if you're saying that everything was going fine before, but now all of a sudden you're not seeing anything, it may be a thing where you're just over analyzing and now you think you can't see something, but really it's there. You're just trying to be very specific with everything that you're trying to do, which is fine. It's good. Quality over quantity. However, it should still be quality with analysis and not quality with, because I was speaking with a trader recently as well, another student, and he was like, I feel like I keep missing the right trades and I keep getting the wrong ones. And that comes down to just trying to be too perfect and trying to basically only get the winners. The matter of the fact is you don't know which one are the winners. You just have to take every setup and trade that you see. Does that make sense?
Yeah. I got it. Thank you.
Problem. Yes. So we have a question from Remy Ahmed, but I need you to turn on your camera. Okay. So I can see 3 brothers there, yeah? Yes, salam brothers, how you doing?
You're right.
Yeah.
No, well, alhamdulillah, we're all together, so that's
Okay, that's fine.
together, innit? Do some back testing today, but got a few questions that I wanted to ask. First of all, wants to know, like, obviously the difference between your POI and your supply and demand zones. I know, like, obviously, so the supply and demand zone, you probably get that on like your probably 4 hours, 5 hours, 6 hours, whatnot, where you can obviously either buy or sell price from. But in your POI, is that the same thing as well, or you just see what price does in that area?
So, when it comes to this question, right, I'm going to answer it this way. It might sound weird how I'm answering it, but because we've got this question before, but in a different format, people usually get like confused. What's order block, supply, demand? So order blocks is just an area where smart money enters, all right? And that's what we use to find supply and demand. However, supply and demand can also be found everywhere, right? So it's about choosing the right supply and demand. And we choose the ones that have broken structure or changed character, the ones where we believe smart money have got into, where they've left an imbalance as well. Now, a POI, you may have multiple supply and demands. A POI is just the area where you're particularly interested in. Hence the word POI, the term POI, which stands for point of interest, because you can have 2 supply zones, but the one that you're most interested in is your actual POI. Like for me, for example, sometimes I'll have 2 supply demand zones. I'll actually highlight them different colors. So I have one gray and one brown, and the brown one is the one that I actually want to enter from. The gray one is a valid demand zone, but I'm not particularly interested in it as of the moment, if that makes sense.
Yeah, no, I hear that. That makes sense. It makes sense. Obviously, just like I wasn't unsure, but I just wanted to get like full clarification on that. And in terms of like your POIs and your supply and demand zones, what's the lowest, highest time frame you'll go for, if that makes sense? Like, what would you call the lowest?
I refine my zones the lowest down to 5 minute. I found the 5 minute quite reliable, so I usually refine down to that. But sometimes I might even refine it all the way down to the 1 minute. It just depends on the scenario and how good of an entry I'm trying to get.
Right. Okay. So, for example, say you've got a supply and demand zone which has changed character and it's left the imbalance on top.
Yeah.
You've obviously found a clean one from like the 1 hour onwards. You will refine it all the way down to like the 5 minutes or up until the 1 minute, whichever you find the cleanest. And you take the off there, or would you see what price does? for example?
I would refine it all the way down, and if it's less than 10 pips, I'll take it off there.
Oh, so even if it's, for example, let's say it's from like 2-3 days ago, you'll directly take the trade off there from that point.
Yeah. It may be aggressive, but yeah, if it's less than 10 pips, sometimes it's worth it, because sometimes the move happens once. It won't give you a chance. So it will just tap in once and then literally straight away.
Could I not, for example, say, all right, price has tapped in to that area and it's moved back off, but I didn't enter that trade. Could I not take the trade on the break of structure, like from a chain? Would that be too risky as well because of like inducements and whatnot?
What do you mean? What do you mean by that?
For example, say like how you said you've took your entry off, let's say a supply zone, right?
Yeah.
And your selling price. Obviously, price has tapped into that area, but I didn't enter that trade. For example, you've got 10 pip order block.
Okay.
I didn't enter that trade. I've missed that trade now. Like, I've missed the order block now. Can I not re-enter through a break of structure?
Yeah, you can. You can, yeah. So if you're seeing like a change of character or break of structure, you can enter straight off of that.
Yeah, that's fine. That's fine.
You guys from Sheffield or Manchester?
Manchester, man.
Money.
All right. 0161.
Yeah, so obviously, yeah, so what sorry, I didn't hear that. So I can't take the trade off that.
Yeah, you can take it. Yeah.
Okay, that's fine.
Let's say you missed it, for example. You're like, oh, okay, cool. You can take it off the break of structure or change of character.
Okay, that makes sense. That's
But
fine.
what should happen is it will tap into that area, but as it's been moving into that area, it's been creating structure as well. So you're waiting for the break of structure or change of character based off of a lower time frame. So that's why I'd use the 5 minute, and then you see that, and then you can enter off of like another order block that's left.
That makes sense. That makes sense. That's fine. One other thing as well, yeah. I think I've already asked you this question quite a few times, but it's about, obviously when I told you, you said you could take 2 entries, right? But is it okay if you show me, like, for example, an example if you've got one? Do you know where you would get your entry? I know you've got your extreme order block and you've got your order block from your change of character or whatnot. But can you like show me an example of, if you do have any, of like?
Yeah, sure. 1 second, let me just get my chart up. One second, guys. So, okay, cool. So for example, right here, I'm gonna try my best to find one on, say, NAS. Now, this is not going to be a perfect example, which is good because the market is not perfect. So this is actually very, very good. So for example, yeah, here, this is NASDAQ, right?
Yeah.
Let's say I'd refined down to, let's just say 5 minute, because that's what I said earlier. So I've refined down to the 5 minute. Probably do 4 minute. Let's see. Find a more perfect one. 3 minute. Sorry guys, if you can hear the wind, it's very windy here right now. So based off of this, right now, look, as you can see, price literally tapped in. It didn't even like go deeper into the area, mitigate it once. So had you missed the tap in move, so let's say, right, you missed this move right here, like this. Let's say you missed that move. Now you'd be looking to enter based off of a situation here, right?
Yeah.
Yeah, you going, yeah? All right, cool, bro. So what you would do then, so I've already missed that trade, right? You'd wait for a change of character here. So let's say you're waiting for this change of character right here. So I change the character here, or to be fair, because we're on the, I would go, this is the moment when I go down to the lower time frame. So let's go down to the 1 minute. So I'll be watching on the 1 minute, yeah. So I'd be like, all right, cool. This is the area where I'm waiting for price to break and change character. Cool.
How come you on the 1 minute if I don't want that?
Because in these kind of scenarios, if I've refined it down to the 5 minute, yeah, I know that it's tapped the 5 minute and I need to go lower than that to find a change of character.
Okay, that makes sense.
Yeah. So I'll come down all the way down to the 5 minute. I can see that it's tapped in, right? So it's tapped in and I didn't get this entry, but I'm seeing that price is reacting here. Yeah.
Yeah.
And I will try and probably enter off of this order block here. Yeah. So this order block right here. But let's say I missed that as well, right? And price it broke up and now this is more confirmed, right? So this is more confirmed. To be fair, this wasn't a change of character, to be fair, but because I've missed this entry here, I would enter off of this one because I've seen an initial reaction, right? And I would put my stop loss below this order block. To be safer, it would be better to enter below this one, put your stop loss below here, but I'll put it below here in case it goes lower. But in this case, it didn't. So I would have missed that as well. So let's say I'd missed all of this, right? I would highlight this order block here and try to get it off as close to this order block as possible. So as soon as price tapped here, that's where you would buy, and then you can basically take that move up. Because basically the idea is when price tapped into your zone, but you didn't enter it, you're still going to see a smaller reaction, but you need to go to a lower time frame, depending on how much you've refined. If that was a 1 hour, I would just go down to a 15 minute and try and find a change of character based off that. But because this was a 5 minute demand zone, I had to drop even lower to a 1 minute.
Okay, yeah, that makes sense.
Yeah.
Right. For example, last question as well. Say your supply and demand zone is more than 10 pips, or say it's like 30, 40 pips. What would you do there? Would you wait to see a Wyckoff forming your supply and demand, or would you see like wait to see another change of character?
I would wait for, so the idea behind the Wyckoff as well is the Wyckoff is always going to be confirmed by the change of character. So when I say wait for Wyckoff, wait for change of character, it's kind of the same thing. The change of character just confirms it. So I would wait for change of character / Wyckoff on lower time frame.
Okay.
Yeah, wait for it on a lower time frame, and that will allow you to get a better entry.
All right. So you're saying, for example, I've seen Wyckoff and I've seen a clean change of character within that, obviously, supply and demand zone.
Yep.
Obviously, enter the trade after the change of character, you'd say.
Yeah, correct.
Yeah, that's right. What about say if price just taps, body closes a tiny bit over, that time the POI is invalid, correct? Or
Yeah. Let's say, for example,
correct.
and this is what, for me, I put a lot of precedence on the 5 minute. Usually below that, there's a lot of noise, and 1 minute body close can still be valid. It's weird, but so I would wait. Let's say 5 minute closes below. Yeah. And so that's made my POI invalid now. What I do is I wait. So now I'm going to go to a 15 minute. So I'm like, all right, cool. 5 minute is great. But let's see if the 15 minute closes below. Because what happens sometimes is price can basically close like this. See? Where it will close below on the 5 minute, but in the 15 minute, as soon as the new candle opens up, sorry. It will close below on the 5 minute, but the next 5 minute candle will push upwards straight away. And the 15 minute candle is still printing, and that prints as a wick.
Okay, yeah.
It closes like that. So that shows me there's still bullish pressure in the market, and it was just a stop loss hunt.
No, I hear that. Yeah, it makes sense.
Likewise, if the 15 minute closes below, but then the next 15 minute opens up bullish, I wait for the 1 hour to close, and vice versa. If the 1 hour closes below, and then the next 1 hour pushes bullish, I wait for the 4 hour close. If the 4 hour pushes below, and then the next 4 hour pushes up, I wait for the daily close. That's how you'll be able to understand. Like, you just keep going up the time frames, and you're seeing, okay, I need to see how this day closes. And most people trade intraday, and daily candle is quite strong in terms of understanding what price wants to do as well.
Yeah, our strategy is intraday, right? Like we only daily, nothing more than that, you'd say.
Yeah.
That's fine, no problem. Thank you.
No worries. So guys, so one more question. Sorry, I'm just gonna see. I believe there's one more question. Yes, Khalid Yusuf.
Assalamu alaikum, bro. How you doing?
Salam.
I don't know if you answered this question because I just joined now
Yep.
from work. I just want to ask. So you see, if, for example, let's say I find a 4-hour level of supply or demand.
Yep.
And then usually you go for the 15-minute to find a change of character. But sometimes I find a 5-minute change of character and price taps into the order block and then it goes to the direction that I expect it to go. So should I always emphasize on the 15-minute, or can I scale? Because I scale down for a change of character mainly on the 5-minute, on the 3-minute, and that's it, which I kind of deem is valid. But should I? Because sometimes I do find a 15-minute change of character, but price just continues to fly up or go downwards into a direction. But then when I find a change of character on a 5-minute, and then it taps to the order block and it flies, like it goes to the direction I want it to. So that's the part that kind of confuses me, because I know you emphasize that on a 4-hour or a 3-hour, you find a 15-minute change of character. But sometimes the 5-minute change of character is also valid. That makes sense.
Yeah. So yeah, no, you can use 5 minutes as well. So usually in the Discord as well, I usually say I put 5 minutes /15. That's what I found most preferable. Sometimes, and that's why I even have a 10-minute time frame as well, because sometimes I look in the middle. Sometimes 5 minutes not clear, sometimes 15 minutes not clear, and then I find it on the 10-minute. So yeah, bro, you can use the 5-minute. I think even before you came on, because you just said you came on, I was actually emphasizing the 5-minute time frame as well. So yeah, go for it, bro.
Yeah, because I started respecting higher time frames, and the 5 minutes or sometimes the 3-minute change of character always validates in a sense where I expect price to go. But then the 15 minutes is a bit of a, I don't want to say a longer wait, but when it does give me a change of character, it continues to go to the direction of the change of character that happened.
Yeah. Makes sense. No, that's fine. You can use 5 minutes. That's fine.
Thank you, bro. Appreciate it.
All right, guys, we're gonna end it there. Thank you guys for joining as usual. And for those of you that joined late as well, you can always watch the replay. We'll post that as soon as possible before the night ends. Okay. Happy trading, and just be careful. I heard there's quite a bit of news this week. I haven't checked Forex Factory myself. But yeah, just trade with, correct risk management. Keep working on your psychology. I put some books in the psychology section, Mental Game of Trading, Market Wizards, and Trading in the Zone. If you feel like you're kind of going through it in terms of the markets and stuff, it's probably something psychological going on. And I was speaking with a student yesterday who were just kind of briefly speaking about when does trading actually start working? And I was like, it starts working when you start doing the same, like when it starts becoming boring, basically. Because it's just about coming to the market, seeing your setup. Did it happen today? Yes. Okay, enter. It didn't happen. Okay, that's fine. Come back tomorrow. As long as you show up, and you put in the work over time, don't measure yourself based on one trade. Measure yourself based on the consistency and the time that you're putting in. Okay. So I just wanted to end it with that. Hope you guys have a good day and enjoy the rest of your evening.